Welcome to this video, and in this video I will tell you one awesome 5-minute per day strategy to deal with a bearish market. So I have already shot two videos on how to deal with a sideways market and a bull market. The links have been given below the video here. And now this strategy will tell you how to deal with a bearish market. And after this, you will have all the techniques with you to deal with any kind of market situation, and that's when you will become a consistent trader yourself. All right, so let us first of all go through this technique, right? And before I start discussing about the technique, as always I have already told in the previous videos, I'm expecting that you are experienced option trader, you know about the options and you have some experience in the market. If you have absolutely no idea about the option or you are not experienced in the stock market, then I would suggest go through my 5-day challenge program, which is free of cost. The link has been given below in the description box, right? And there you will get more support and more confidence to deal with the stock market.
Hi, I'm Harshit Mohan. I am a stock market investor and trader by passion. I am father of a lovely daughter, husband of a loving wife, and I'm also the founder of Peaceful Wealth Community.
Okay, so let's go ahead and see what is this strategy, which is basically a bear call spread used for a bearish market when the market is falling. Yeah, so you need to execute this strategy when the market is falling. But then how do you know when the market is falling, right? So if you have gone through my two videos like the Iron Condor and the bull put spread, you know that I use Bank Nifty RSI. So what you have to do, simply include this RSI indicator in your charts. Give input length as 7, style as 60/40, boundary as 60/40, and you have to look for the Bank Nifty weekly chart. So this is on a weekly time frame, okay? So you have to look out for the Bank Nifty weekly RSI less than 40. Okay, it should be less than 40, because when it is less than 40, it shows that the market is bearish. In the bull put spread, we have discussed it should be more than 60. In the Iron Condor, we have discussed it should be between 40 and 60. And now we are looking at it should be less than 40. That's all. So that is number one. And number two, you will execute this trade at 3:15 p.m. on Thursdays, on expiry days. You will close this trade when the profit is 1000 rupees, when the loss is 1000 rupees, or when it is the expiry day and it is 1:30 p.m. And you will do the adjustments at 3:15 p.m. every day. These are some techniques. So whole day you can do your work, you can be in job, you can be in business, you can manage your household, do whatever you want to do. At 3:15, simply log into your trading platform, do the adjustments, and then again log off and go back, enjoy your life. And this has the potential to give you more than 30-40% returns per annum by giving just few minutes per day. That's all, not more than 5 minutes. Alright, so I told you the rules, and let's start with a simulation in Opstra where you will understand this even better. So this is the week of 28th Feb 2022 when the RSI of Bank Nifty was less than 40. So let us do the simulation. Yeah, so this is 28th Feb, which means the expiry was on 3rd. So on 3rd of March, we will initiate the trade for 10th of March expiry, right? So on 3rd of March, we will initiate, and for the 10th, so okay, so the payoff date will be 10th of March. And we will initiate it on 3rd of March. And 10th of March is the expiry here. And we will initiate the trade at 3:15 p.m. Okay. So this is 3:15 p.m. Now I'm opening the option chain. And what you are supposed to do, you are supposed to sell 15 delta and buy 15 delta. Okay, just remember, sell 15 delta, buy 20 delta. If it is not exactly 10 and 15, choose any delta which is closest to this. So let's start with the simulation, and this is Bank Nifty. Sorry. Okay, so Bank Nifty 3rd of March at 3:15 p.m. We will look at the option chain. This is 15 delta, so I'm going to sell it. This is 10 delta, I'm going to buy it. Sorry. Okay, this has to be done on the call side because it's a bearish market, right? So you need to sell 15 delta call, and you need to buy 15 delta call. 10 delta call, sorry. Oh my god, I'm sorry for this. 15 delta call you need to sell, and 10 delta call you need to buy. Okay, right? So this is Bank Nifty. Left hand side is call, right hand side is put. This is 15 delta, I'm going to sell, and this is 10 delta, I'm going to buy. So the payoff chart looks like this, and let's go forward one day. So on 4th of March at 3:15, so we will do our adjustments only at 3:15 and no other time. So on 4th of March at 3:15 we will see what is the profit and loss, and bingo, the next day itself we had a profit of 1081.25, which is beyond our target. So our target was 1000 rupees. On the next day itself we reached our target. That means next day we will close our positions, when we'll simply enjoy the profit, and we will wait for the Thursday to initiate a new position. So for rest of the days between 4th to 10th we will not do anything, and we will initiate a new position on 10th if the RSI, weekly RSI, is still less than 40. So let us see what happened on the 10th. Right, so this is the week of 7th of March, and here also you see the RSI was less than 40. So let's try this simulation now. 10th of March, so we'll initiate position on 10th of March for 17th of March expiry. Alright, and our start date will be 10th March, our expiry will be 17th March, and our time frame will be 3:15 p.m. Let's open the option chain. Okay, 15 delta sell. Okay, sorry. On the call side we have to do this. This is 15 delta sell and 10 delta buy. Alright, let's go forward one day. We have a profit of 41.25 rupees, and it has not met our target of 1000 rupees of profit, 1000 rupees of loss, and it is not even a Thursday expiry day. So we will simply do the adjustment. So I will close the existing positions and initiate a new position. Okay. Option chain. 15 delta sell, 10 delta buy. Next day, 14 March at 3:15 p.m. we'll see there is a loss of 727 rupees, and it is still not met our target of 1000 rupees of profit or 1000 rupees of loss. So we will do the adjustments, and our expiry is on 17 and today is 14. So it does not meet any of our exit conditions. We'll simply do the adjustment this time as well. Sorry. Okay. So I'm going to close the existing positions and initiate new position. So again 15 delta sell and 10 delta buy. 15 delta sell and 10 delta buy. Let's go forward one day. Now this is 15th of March and it is 3:15 p.m. and our loss has drastically reduced to 160 rupees. Again, we will simply do our adjustments because it is still not the expiry day and our profit loss is not yet 1000 rupees. Right, so far we have a loss of minus 160 and let's initiate new positions again 15 delta sell, 10 delta buy. Now this is one day before the expiry at 3:15 p.m. What is the status? We have a loss of 911 rupees. So it is still not close to our target of 1000 rupees of loss or 1000 rupees of profit. So again we'll simply do the adjustment. 146.5, this is 77.45. Okay, and now this is our expiry day, and on expiry days we will close all our positions at 130, and this is 130, and let's see what is the status. So we have a loss of 1141 rupees. Okay, so we will gracefully accept this loss and move on. All right, we will gracefully accept this loss and move on. We cannot be profitable all the time. Let's discuss one more scenario. Okay, so this was 13th of December. So let's see what happened on 13th of December. This is 13th of December. That means we'll initiate the trade on 16th December for 23rd of December expiry. So let's select the payoff date as 23rd December and our start day will be 16th December. Our expiry will be 23rd December. Okay, and we'll initiate the trade at 3:15 p.m. Option chain, and we are going to sell 15 delta call, buy 10 delta call. So we don't exactly have 15. Let me sell this. Okay, let's go forward one day. This is a profit of 760 rupees. Okay, it is still not met our target of 1000 rupees of profit, so we will simply do the adjustments. So I'm going to close this. And initiate new position. December, our profit is bingo 1487.5 rupees. It is how much? It is almost 6% of profit. 6% profit on our capital. So for this, the margin capital is 25,000. And on 25,000, we are looking at a profit of 1000 rupees, which is 4% returns on our margin capital. If you are getting 4% returns, it's extremely good return. And in this particular example, we got a return of even 6%. Right? So it's even better, much better. So now you see, there will be some occasions when you will face some losses, but then your profits will be more than your losses. And with this video, now you will be armed with all the strategies that you are required to tackle any kind of market situation. So now you know about the iron condor, you know about the bull put spread, and you know about the beer call spread, and accordingly you can apply this technique, and it will make sure that you will always make money in the stock market by giving just 5 minutes per day. I know it sounds unbelievable, but it is true. You can see it yourself. It is true. So thanks for watching, and if you want more support, more help, you can join my free 5-day training program, where I share a lot of other techniques. I share the templates, and I also give support to people who have joined it. Alright, and if you have not subscribed to the channel, then please do subscribe it and spread it to your friends. So take care, and I wish you a very happy and wealthy future.